All right, everyone. What's going on? All right, so charge off. I've been getting so much requests for it. So I'm going to go quickly into late payments and then I'm going to hit charge off, right? Because we know that late payments is what leads into the account being charged off. So without further ado, let me share my screen. So I know I've said it many times before that late payments are illegal, and we're going to cover it one more time. So right now we're at 15 USC 1681A under definition, rules of construct, right? When we scroll to number 2, it says, except as provided in paragraph 3, the term consumer report does not include your consumer report, aka your credit report. Report containing information solely as to transactions. Transaction. What is your payment history? It is a list of all transactions, right? Your experience is the relationship between the transaction and the creditor or the person, corporation that extended that line of credit to you. So the transaction payment history, the experience, the amount of credit that is being used at any particular time on that account between the consumer, which is you, and the person making the report, which is the creditor or the corporation. So if Congress is saying the term consumer report does not include transaction or experiences between the consumer and the person making the report, where does a late payment come from? How does a late payment lead into a charge off, right? Then let's go to 15 USC 1666B. So right now we're talking about the Credit Billing Act, right? And if we go to A creditor may not treat a payment on a credit card account under an open-end consumer credit plan as late for any purpose. So right here, I would put a full stop and I will use this verbiage, add it to my late payment letter, the one that I'm going to post in the description below, and you're going to be using 15 USC 1666B, timing of payments, coupled up with what we just spoke on in 15 USC 1681A, number 2A1, and you're going to build out your late payment letter, all right? So now let's move into the real matter, which is the charge off. So I'm going to go share screen again, and I'm going to do a quick summary of this charge off thing. Also, I finished the charge off deletion guide. The description for the charge off deletion guide, not the description, the link will be in the description. So if you want the charge off deletion guide, it will be in the link below. So make sure that y'all get that. So Department of the Treasury, IRS. So this is an IRS publication. Daraine isn't making anything up, right? So this is the 2020 IRS publication. Instructions for forms 1099A, which is like an abandonment of property or collateral, and 1099C, a cancellation of debt. And it says acquisition or abandonment of secured property and cancel debt. So what this means is secured party is where there's a security interest or in a collateral, right, by a secured party. So I'm not going to go in grave details of this. You will be able to get this document. You're going to get 2 documents. You're going to get 2 publications in the charge off deletion guide, along with 4 letters that's going to teach you how to get your charge offs deleted, right? So let's start here. Coordination with Form 1099C, which is your cancellation of debt. If in the same calendar year, you cancel a debt of $600 or more, in connection with a foreclosure or an abandonment of secured property, it is not necessary to file both forms 1099-A and 1099-C, cancellation of debt, for the same debtor. So if you are a debtor and you abandon a property, like a home or a car, and they foreclose on it or repossess it, they're saying that the creditor don't have to file a 1099-A and a 1099-C. They can include both on the 1099-C only. You may file form 1090-C only, right? So that's what that is saying. And who must file it? In addition to the general rules specified above, it's going to give you a breakdown of multiple owners of a single loan, government unit, subsequent holders, multiple lenders. It's going to go in a lot of stuff, right? And it's going to tell you when to file it. But this one now, they're talking about abandonment. So what we're going to scroll down to real quick is instructions for the 1099-C, because that's why we're here. We're here for charge off. The creditor. So when a 1099-C is filed, or when a creditor writes off the debt, the creditor's phone number must be provided in the creditor's information box. So that 1099-C that you're supposed to get from the creditor once the debt is charged off and it's $600 or more, the creditor's phone number must be provided in the creditor's information box. So that's one thing. If that's not in there, that's a violation. It should be a central number for all canceled debt at which a person may be reached who will ensure the debtor, which is you or obligor, is connected with the correct department. Do not file Form 1099-C when fraudulent debt is canceled due to identity theft. So if you're a victim of identity theft and you reported this identity theft, no account that you reported an identity theft on, there should be a charge off for. I'm gonna say that again. If there is a case where an individual have been subjected to identity theft, they had their identity stolen, a creditor cannot file a 1099-C on a fraudulent debt. All right, if the debt is canceled because of identity theft, they cannot file a 1099-C. It cannot be a charge off. All right, Form 1099-C is to be used only for cancellation of debt for which the debtor actually incurred the underlying debt. So if it's a debt where there is no identity theft, then that's fine. File Form 1099-C, cancellation of debt, for each debtor for whom you canceled a debt owed to you of $600 or more, right? If you are an entity, and like I said, you'll get this document once you get a charge-off deletion guide. It's going to go into more details, but for the sake and the purpose of this video, we're going to skip to the highlighted sections. Form 1099-C must be filed regardless of whatever the debtor is required to report the debt as income. So charge-offs are charge-offs are illegal, right? And I must say charge-offs are illegal to be reported on your consumer report for the simple fact. A 1099-C must be filed regardless. This changes the status from it being a debt to ordinary income. Income does not get reported on your consumer report. So the reporting of a charge-off on a consumer report is illegal because it is income. It is ordinary income. It is income. It is not debt. A charge-off, if it says charge-off, it means they filed a 1099-C. It's not a debt anymore because this has changed to income and it must be filed with your taxes. It's not a debt. So that's why I say charge-offs are illegal. Do not combine multiple cancellation of a debt to determine whether you meet the $600 reporting requirements unless the separate cancellations are under a plan to evade the Form 1099-C requirements. It's going to tell you now who must file. File the Form 1099-C if you are any of the following. And it's going to go down and tell you a financial institution, credit union, any of the following, FDIC, NCUA, National Credit Union Administration, the military department, the postal service. It's going to go down into great details. But here, number 6, any organization whose significant trade or business is the lending of money, such as a finance company or credit card company. This is the rule right here that gives credit card companies the, don't want to say legal or lawful, right? But it gives them it gives them an opportunity. It makes them eligible to file a 1099-C because of this section, right? The lending of money is a significant trade or business if money is not lent on a regular and continuous basis. So this section right here encompasses many of the credit card companies. Exceptions. Until further guidance is issued, no penalty will apply for failure to file Form 1099-C or provide statements to debtors for amount. So this is where it's a double-edged sword, because on one hand, they're saying that you must file it, but on the other hand, there is no penalty if they don't file it. So it's like they're giving them a slap on the wrist. Oh, you didn't file it? Well, shit, okay. So you just gotta learn the language and use it to the best of your ability, because they're not holding them accountable. So you need to hold them accountable. All right, so who must file? Earlier, must issue a form. So let's go. Who must file, right? When you click this, it's going to tell you who must file. So must issue a Form 1099-C if that creditor's part of the canceled debt is $600 or more. So we spoke about that. When the debt being over $600, the Form 1099-C must be filed. But at the same time, they're saying that if they don't do it, they're not going to have any penalty, which is so stupid, but whatever. A creditor will be deemed to have met its filing requirements if a lead bank, fund administrator, or other designatee of the credit complies on its behalf. The designee may file a single Form 1099-C reporting the aggregate canceled debt, or may file Form 1099-C for that creditor's part of the canceled debt. All right. So they go into more verbiage here, and they talk about debt, how they define it. A debt is any amount owed to you, including stated principal, stated interest, fees, penalties, administrative cost, and fines. The amount of the debt canceled may be all or only part of total amount owed. However, for a lending transaction, you are required to report only the stated principal. And it's going to go in again when to file Form 1099-C in the year following the calendar year in which the identifiable event occurs. And then when you go to exceptions, it's going to give you a list of exceptions that are accepted to this rule. Later, if you cancel a debt before the identifiable event occurs, you may choose to file form. So they're giving them an option right now to choose to form the 1099-C for the year of cancellation. No further reporting is required, even if later identifiable event occurs with respect to an amount previously reported. Also, you are not required to file an additional or corrected Form 1099-C if you receive payment on a prior year debt. All right, so When is a debt canceled? A debt is deemed canceled on the date an identifiable event occurs. And they'll give you more example of what an identifiable event is. If you choose to file Form 1099-C of the year of cancellation. So an identifiable event is one of the following. They're going to tell you bankruptcy, an extinguishment made by the debt. Like they're going to go into details of what an identifiable event is. And these are the event that explains when to file it, and explains more when a debt is canceled, what can cause it to be canceled. All right. A cancellation or extinguishment when the statute of limitations for collecting the debt expires. We know what a statute of limitation is. If you don't know, a statute of limitation is the date when you made the last payment. The clock starts from there. Each state is different. So you want to look up the statute of limitation for your state for that particular debt, and it's going to give you a time frame. And that clock starts ticking once the last payment was made. For canceling extinguishment when the effects foreclosures. Okay. A cancellation or extinguishment making the debt unenforceable. Yeah, so like I said, y'all will be getting these documents in the charge-off deletion guide, plus the letters to use to get your deletions. They have the exceptions here. So if you want to find out what the exceptions are, you'll go ahead and read that. And it's going to go into more stuff. So it's very, very, very educational. This document, like I said, it came from the IRS. It is a IRS publication. Where is my thingy? Okay. It's an IRS publication. Now the charge-off deletion course, the charge-off deletion guide, the charge-off deletion packet that I created will be in the description. If you are struggling with charge-off, late payments, don't let that stop you from getting your life together. Take your power back, comprehend the language that is being used, use their words against them. You know what is expected if there's a charge-off. You know they're supposed to send you a 1099-C. You need to hold them accountable. You know that charge-offs are actually illegal, because once a charge-off is filed, it is supposed to be put on your taxes as ordinary income. Income does not get reported on the consumer report, which makes the filing of that charge-off or the statement of the charge-off inaccurate, for the simple fact that, stop share new screen right here. So when we go here, right, so we're at the Fair Credit Reporting Act, which is 15 U.S.C. 1681, right? And when we go down to compliance and procedure, and we go to 15 U.S.C. 1681E, and then we go down to B, right? And B says accuracy of report. Whenever a consumer reporting agency prepares a consumer report, it shall follow reasonable procedure to assure maximum possible accuracy of the information containing concerning the individual about whom the report relates. And like I said, income is one of those things that does not get reported on your consumer report. And that is very, very key to know. All right. Stop share. So let me share my screen real quick. I want to show y'all something. So we're on Experian website, right? And remember, I just told y'all that income does not get reported on your consumer report. So this is an article that's on Experian website. Does your income appear on your credit reports? Income is not a part of your credit report, and while lenders often factor in your income into their lending decision, they'll typically get that information directly from you during the application process, right? And right here, when it gives you the breakdown of what is included in your credit report, guess what's not there? Income, personal information, accounts, inquiries, public records. So there is nowhere here that says income is a part of your consumer report. So if income is not a part of your consumer report and a charge-off is being reported on the consumer report, then the report is not accurate. It is not accurate, and we have reason now to believe that the whole account is fraudulent, because now you're reporting an account as a debt, but a charge-off is on there, which means a 1099-C was filed. And a 1099-C that is filed, according to the IRS, share screen. Where is my PDF? Screen 2. Where's my Zoom? Hoping that y'all are seeing this, because it's not coming up. All right, hold on one second. I'm going to stop share, and then I'm going to share again. Okay, here we go. Perfect. According to the IRS, where did we have it? Form 1099-C must be filed regardless of whatever the debtor is required to report. The debt as income. So it's income. Income isn't there. So a status of a charge-off on the account is an inaccurate account, and it must be deleted. So this, in conjunction to what I have in the charge-off deletion guide, I'm telling y'all, it's amazing. If y'all have a charge-off, get the deletion guide. It's going to do amazing wonders. You know that late payments are illegal. You know that utilizations are illegal. We've just proven that charge-offs are actually illegal, because a charge-off is supposed to be reported as income, as ordinary income, not debt. It's income, because you filed it and they filed it and they got a tax break, and the IRS says you must get your 1099-C. The IRS also says it must be filed as income. Income does not get reported on the consumer report. So that makes charge-off a fraudulent reporting of that account. So get your charge-off deletion guide. I'm gonna have a few other links in the description. If you're interested in joining the mentorship, if you want to learn from me, I'll also put a link in the description for you to join the mentorship. I'm telling y'all, the game is heavy. The sauce is heavy. Let's learn. Let's grow together. Let's go. Let's go. Let's go. What charge off? Ain't no charge offs here, bro. Let's go.